you mentioned Tether there, and I'm glad you brought it up. And you mentioned maybe a token, or maybe a synthetic equity asset. Right now, these things are considered DeFi, right? Decentralized finance. Most of them are based on the Ethereum network, which came a little bit later than Bitcoin. We know the whole story there. It had the smart contracts, and again, all of this brain power went there. And Michael, that's what caught my eye a few months ago in this space, is that I saw the rate of growth of some of these instruments at a rate that I hadn't even seen in the 1990s. When I worked at Bankers Trust on Wall Street, we were putting together some exotic risk. We were probably one of 10 or 20 shops in the world that were packaging these products for customers. And some of these things were high level concepts to understand in finance. And yet I saw this happening in a decentralized way. And I was like, wow, this feels like next level growth. I've never seen anything like it. And that's what attracted me to this ecosystem. But that's a very different thing than Bitcoin. And you've made an incredible argument for Bitcoin. Where does Ethereum come into play? DeFi, smart contracts. Obviously, Tether's on there. Tether's got quite a big market cap right now. And I agree with your train of thinking. It's like there's the currency, there's the property. That currency, you mentioned Tether. What will play out when it comes to Ethereum?
Let me give you an interesting magic quadrant for you.
Okay.
If you want to take the entire crypto universe and divide it into 4 quadrants, you've got property, you've got currency, you've got platform, and you've got application. And what is property? And that's the decentralized economy. Okay, there's a centralized economy, a traditional economy. There's property, there's platform, there's application, there's currency. There's the centralized world, the decentralized world. So once you understand that, decentralized property, right? The leader is Bitcoin. What is it? It's engineered for integrity and trust over the long term. What do I want it to do? I just want it to be here in 100 years. I really want it to be here in 1,000 years. Do I want to change it? Not really. Okay. In Manhattan,
it has low ambitions, right? You like that it has low ambitions because it does what it says on the tin, as they say in the UK. You like it the way it is, because in that sense, it'll be durable and it'll store value for 1,000 years. That's why you like it.
I want indestructible inertia. Okay, so if you think about Manhattan as the metaphor, and you're in Manhattan, I've got a city block in Manhattan. I'm hoping Manhattan's made of granite. That's why it's Manhattan. It's well located too. So a granite city block in Manhattan. Okay, Bitcoin is 21 million blocks of cyberspace. And what do I like about granite? It's heavy, it's inertial, it's indestructible, and if I build a 100-story building on it, it won't sink. You know, there's other places. There's a very, very tragic surfside accident in Miami Beach. A building sunk, built on sand. Okay, you want to build something, you want to build it based upon granite, a strong foundation. That's your property. There are other properties that ultimately, generally what you do is you pursue a proof of work, decentralized mining architecture. The way that you get that granite indestructibility over time is you're securing the network with a lot of energy. You're securing the network with a lot of technology. The 7th generation SHA-256 ASIC miners, that's a lot of technology capital. You're securing the network with a lot of political capital, like the governor of Texas, the nation state of Iceland, Canada. They have a lot to gain, so they'll protect it. You're securing the network with a lot of human capital, all the mining operations, and you're securing the network with a lot of external financial capital. I put billions of US dollars into mining facilities, which are then mining Bitcoin. And so everybody that's got a vested interest in that has now got a vested interest in defending Bitcoin and preserving the integrity and not having anybody change it, right? A lot of vested interest. So that's the architecture for property. There are other crypto asset networks, Bitcoin Cash, Bitcoin Satoshi Vision, Dogecoin. They're properties. right? Obviously, I have an opinion about which one is the safest bet. Bitcoin feels like the risk-off, right, crypto property network, right? It's the Manhattan in cyberspace. One day, I think billions of people want to live there. Now, you've also got digital currency. You're in Manhattan. Let's say I give your family, Brian, $1 billion, and I say, invest it for the next 100 years. Or you can buy $1 billion worth of land in Manhattan, buy $1 billion of Bitcoin. Okay. What else can you do? You can buy $1 billion worth of US dollars. Okay, that's buying the digital currency. If you buy $1 billion worth of Tether, you're just buying the currency. Is it a good idea for the long term? Not really, because it's going to devalue at 1 or 2% a month or 7% a year or whatever. It's meant to devalue. You're tying yourself to an asset which is tied to the fiat economy. Is it a good idea if you need to actually buy $1 billion worth of stuff tomorrow? Yeah. Who needs to buy $1 billion worth of stuff tomorrow? Traders, exchanges, right? Insurance companies, banks. What if you need to buy $1 billion worth of stuff in 6 months? It's a good idea. Like, you need it for working capital. MicroStrategy has $50 million worth of dollars as working capital. We have billions of dollars worth of property. The $50 million is what we think we need to trade with to pay our employees, pay our vendors for the next year. Okay, so that's working capital. That's the best use of digital currency. Who needs it? Well, how about like 1.7 billion people without a bank that would like to use US, from their point of view, the US dollar is an alternative to the bolivar or to stone rocks of the Yap people, right? I mean, or to bales of tobacco. Pretty good idea to run an economy that otherwise is constrained to Stone Age barter. How do you sell your services to someone in Manhattan when you live in El Salvador over an internet connection if you don't have digital currency? Okay, so it's not a bad idea, right? My friend Eric plays chess with me. He pays somebody in Siberia to give him chess lessons. It's a lot cheaper than paying someone in Manhattan to give him chess lessons. The guy in Siberia gets a good deal. Eric gets a good deal. Eric needs all the help he can get. Eric, if you're listening, right?
So that's the currency.
That's the currency, and that's the lubrication to turn on 8 billion people in the economy to trade with each other on $50 phones. So yeah, it's useful. Tether is the leader in the decentralized, in that space, They're using a proof of authority, some architecture.
Yeah. And that's on the Ethereum network right now.
Yeah, and I am not an expert on all the intricacies. All I know is there's a stack of digital currencies, right? Tether, DAI. Some are more decentralized than others. They're sort of private, and over time they will compete in a way with CBDCs and state-issued digital currencies, and there'll be pros and cons, right? Just like digital property, Bitcoin competes with real property.
Yeah.
You can buy gold, you can buy land in Kansas, you can buy Bitcoin, right? There's that flow, and there's flow between digital currencies. Why would I want it? Because it moves at the speed of light on Saturday afternoon to a $50 Android phone, and US dollars don't. That's why you would want it, right? And the third quadrant is digital platform. Ethereum is the leader of digital platform. And the idea is let people build everything you could possibly imagine in a DeFi architecture and make it work at the speed of light on a Saturday afternoon. And you don't have to go through the traditional banking and the traditional brokerage and traditional every system. And then the fourth is digital applications, decentralized applications. Uniswap wants to be an exchange. Somebody wants to be an NFT. Somebody else wants to be there's maybe a license or a provenance or whatever. Your imagination is your limit. Now, the decentralized apps compete with centralized apps. Decentralized platform competes with central, Ethereum versus AWS. Bitcoin versus Kansas. Tether versus the dollar and the Fed wire. Okay, and Visa and Western Union. And you know, there's a lot of answers, right? Like Western Union costs a lot of money, and Tether doesn't cost a lot of money to move it. And then there's lots of jockeying. There's competition. You know, I have a Bitcoin versus my most popular podcast, Bitcoin versus gold, more than 1 million views. I think that gold is the 19th century property and Bitcoin is a 21st century property. But the market is deciding where the money is going to flow. Tether is competing with, and will compete with CBDCs if they ever show up. But until then, it will compete with Western Union and Visa, right? And Ethereum will compete with, centralized stuff. And the market will sort out, who wins, who loses, right? And maybe there's lots of winners. And maybe multiple people win at the same time, and certainly there'll be losers, right? Because that's the way it works. And then you'll also, in addition to the market competition, you'll have regulatory clarity, right? There's a certain set of regulations that apply to currencies. There's a certain set of regulations that apply to property. Guess what? If you transfer $1 billion of Bitcoin, you got to pay tax on it, property tax. On the other hand, you transfer $1 billion of currency. There's no tax on it, but there's KYC, AML. There'll probably be some KYC, AML on property too. And then with platforms, maybe some platform. There are rules that we apply to platforms. There's a big political debate about Facebook and Apple and Google and their obligations, and Amazon, their obligations as platforms, right? You know what's going on. There'll be platform issues. And then finally, there'll be applications. You want to be an insurance company and you want to sell life insurance to like 16-year-olds. On the day that a 16-year-old buys life insurance on their parents and then they kill them, there's going to be somebody is going to show up, digging around saying, did you sell an insurance policy to a criminal that collected on it? I have a colorful imagination, Brian. So please take that as just a random hyperbolic example. But if to the extent that you want to be a decentralized application and if you want to sell future derivative swaps in London, the regulatory authority that is concerned with future derivative swaps in London may be interested in you. And then you have to deal with that.